All right, welcome back. Let's take a look back at September. So last month we discussed selling out of VOO and adding realty income to the portfolio. As expected, all of the remaining funds for the month went to realty income. So before we head into October, I'm going to add another ticker to the $100 a month portfolio. And that ticker is going to be Vici Properties, the second and final REIT of the portfolio. From Vici's website, Vici Properties Inc. is an experiential real estate investment trust that owns one of the largest portfolios of market-leading gaming, hospitality, and entertainment destinations. In a nutshell, they own gaming/gambling and entertainment properties, primarily centered in Las Vegas but branching out to other states. It's probably not high on many investors' checklists, but I am a big proponent of the buy local ethos. I live about 90 minutes from Las Vegas and consider them local enough. I go there more than I go to Phoenix, which is about 3 hours in the other direction. Vici also has a nice dividend growth that I only expect to continue to grow for this relatively new REIT. So in 2018 we had 99 cents, 2019 $1.17, in 2020 $1.25, 2021 $1.38, and in 2022 their dividend is $1.11 to date, and today being October 2nd. So we've got one more dividend payment to come out, and that should bring us up to about $1.50, up from $1.38. A couple of other items I wanted to point out are the Wall Street rating for Vici is a strong buy, but please read the disclaimer. If we look at the analyst breakdown over here, we have 17 is a strong buy, 4 is a buy, 1 is a hold. Nobody has a sell or a strong sell. But you have to remember, these ratings are fluid. This is not strong buy for the next 17 years or 20 years. But that is what I plan on doing with it. Just buying, holding, regardless if this strong buy turns into a strong sell. As long as they continue to grow, put out that dividend, that's what I'm after. I'm more of a dividend investor, and I don't really care much for growth, as you can see in the portfolio. I'm only 25% invested in growth stocks, everything else dividends. And if we look here at the Charles Schwab analysis of Vici, we can see that the shares held by institutions is at a healthy, here we are, 104%, which we know is mathematically impossible. And you can read about how the institutional holdings are over 100% on the Investopedia website. But in essence, what they say is from share lending, the institutional holdings can get over 100%. But in order to do that, the initial institutional holding quantity needs to be very high to begin with, 90% plus. In any case, this just shows a strong interest by the institutions in Vici. Which again, take that for what it's worth. Give it as much interest as you think it deserves. And in other news, the rest of the portfolio seems to be seeing red, but that's to be expected for the drip investor. We're always adding money on the leading edge of the ticker. So we are more susceptible to the whims of the market as we're adding money and the market's going down. So we're buying at the market price the day, the week, the month prior. And it's just to be expected. If we look here at a couple of these holdings that I purchased, and I haven't put any new money in them, I'd say in 12 to 18 months, they're up 81%, 300%. But as I go to increase my holdings in them here and here, I'm going to have to lower that percentage as I increase my average cost up from, $36 here and $10 here. So as I increase my average cost, my gain goes down. That's what happens when you don't have a large lump sum to put in all at once. And that about wraps it up, folks. So thank you for watching this quick update. As I increase the number of holdings in this portfolio up to a maximum of 10, once we get there, we'll start looking into other avenues. But I want to get the base portfolio set up and get those positions growing as I add $100 a month to the portfolio to show that you too can start a small portfolio and get this thing going. I'm thinking that in January I may need to change the name of the $100 a month portfolio to the $150 a month portfolio. I think that's quite feasible, and we'll just do that. It's been 2 years. January will be 2 years, so time to increase the contributions to the portfolio and having more positions. I'm going to want them to grow more quickly, and $150 a month. Just $25 more a month per pay period will help that happen. Okay. Thank you for watching. Please like and subscribe, share. If you've got any questions, please let me know. I'd be happy to go over them with you. And that's all. See you guys next month.